All right, so let's get started. How's everyone doing? Hi, my name is Edith Young. I am one of the founders for Founder Hong Kong. So I'm very, very excited for today's conversation. We have over 100 investors and founders joining us from all over the world. I also really wanted to thank Candy, our community manager, for bringing everyone together and helping to promote. Founder Hong Kong is a nonprofit, organization with the goal to connect Hong Kong and Silicon Valley. We really wanted to help support all the young and amazing founders from Hong Kong, and really wanted to support all of you guys, in particular connect you with mentors and amazing experts for all over the world. And obviously I'm sitting in Silicon Valley now, and today we have two really, really amazing investors joining us. Nancy Sun from Goldman Sachs, currently out of Hong Kong, and then also Alfred Chung calling in from Silicon Valley. Hi guys, how are you?
Great.
And
great. Hi, Edith.
Hi. Awesome. So it's been a really, really tough year for everyone. And if I particular count, it's been literally half a year since the coronavirus hit the venture and the startup world. There's a lot of statistics, on China's side, drop about 30-some% in terms of the number of deals and the total dollar invest. And of course, US is basically follow suit. And it seems like, early stage definitely have dropped quite a bit, although I don't think that's the case necessary for growth stage. So today we're gonna have like all kind of questions and like discussion topic, but we're all friends. So I wanted to make this as casual. We're just, talking about like our opinion and things that we wanted to share with each other and the community. But quick housekeeping for everyone. If you have any questions, feel free to like put your question on the chat. We're not going to open up for everyone to ask questions. Otherwise, it would be voice from God, a little bit chaotic. So I'm going to, handpick and questions that if you guys have any from the chat. So feel free to send the question over. We probably will talk among ourselves like about 30-40 minutes or so, and leave at the end about 15-20 minutes for any question that you guys may have. So enough of me talking, but how about we actually start with you, Nancy, a quick sort of like, who are you? What do you focus on in terms of investment, geography, and all the good stuff?
Okay, thanks a lot, Edith. I work at Goldman Sachs. I'm with a group that we call Principal Investment Area, but you can just think of it as our growth equity slash corporate equity arm. And what we do, we typically focus on late stage venture capital type of deals, or in some cases we do buyout and control deal when the company's more mature. So I myself, I spend most of my time in the Greater China region, and occasionally in the Japan market. And my main focus is on technology, and which arm of technology-wise, we spend more time on software rather than hardware. But that's just part of our DNA. Yeah.
Awesome. Alfred.
Hi, Edith. So I'm Alfred Chung. I was born and raised in Hong Kong. So I'm native. I'm one of the co-founders of Founders Hong Kong, and I've been here in the US in Silicon Valley since I went to college and then graduate school, and then working here. And then I started the company called BE Systems in the 90s, which got sold to Oracle in 2008. And then since then, I started a bunch of companies, invested in a bunch. Eventually, I decided that starting a fund is really the right time in the right place. And raise capital really is a seed to a software technology fund. So we invest into mostly software infrastructure, fintech, and collaboration type software. Yeah.
Awesome. So I know you guys probably get these questions every single time you're at any sort of webinar or panel. Obviously, COVID is still here, and it doesn't seem like it's going away anytime soon. Has it impact in terms of your investment strategy or thesis because of the pandemic?
So am I the person taking the question first? Okay.
Sure.
Okay. Okay, sure. Yeah, we actually spent a lot of time discussing and reviewing it. And when initially, I think back in January, February, that was when everybody was in a little bit of panic mode. We did spend a lot of time with our portfolio companies to make sure that they are well funded and going into the crisis, and potentially and they have a war chest coming out of a crisis when we do come out of it. So, but now actually since I think late April, we're back to investing mode again. And since we have closed on the growth equity side, I guess it's more relevant for the audience here. We have closed about 10 deals globally, and we closed a really big one in Asia as well. And you ask about whether will this impact our investment and the strategy. I think definitely, especially from a strategy perspective, we're still combing through it. But I think, for example, on the positive side, if you talk to the global CEOs, I think there is a renewed interest, or finally, that the CEOs are willing to take a piece of, are starting to on a clean sheet of paper and spend time on B2B workflows. So that's actually quite positive for technology companies that are trying to solve those issues. Because I think in this region and actually globally, there was a lot of hype and excitement in the B2C softwares, and I do think there's still places for them. But the B2B guys, I think that in general there was less of focus, especially in the Greater China. But I do think now that this is a great opportunity for really good companies that are solving real problems on the B2B workflow side. And then what will we focus less? But before going to that, I want to say that this is definitely a humanitarian crisis. So it's not only a impact on the economy, but also on how people live their lives. So for example, on the travel or travel related, if you look at our portfolio companies, they're taking a big hit. But and I think in the foreseeable future, travel related is one clear area that we're probably going to spend less time on.
Yeah, makes sense. So Messi is busy. How about you, Alfred?
Well, actually, because Raise Capital actually is a fairly new fund. The fund literally started because there is a crisis. So I call myself a crisis investor because my experience been April 2000 and May of 2008. Those sort of two different times that I went after and invested in a lot of new technology companies. I would say within 12 to 18 months of the bottom of the crisis. So crisis actually is almost magical. I mean, it's very tough for entrepreneur because now raising money for early stage is pretty tough. I mean, like you can imagine if any of the existing fund who have invested in a bunch of companies, especially in the last 2 to 3 years, which when capital was basically unlimited, that was flowing into the marketplace. Now we have to reset the mindset. The capital is now very valuable. Plus, chasing cash flow positiveness is going to be extraordinarily critical for the entrepreneurs. I think in our case, I was frustrated with 1,000-seat fund funding in the marketplace competing with me as an individual. And it was very hard to do deals towards the last couple of years because people literally was sending out term sheets without really knowing much of the investment thesis itself. That's just not the way to raise capital, go after investing in things. We invest in the companies that we think is going to be game-changing company in the next decade. Then you look at what we will have to do is we have to think of, well, we get a short period of time right after the crisis that either the companies can pivot to that new world in the next, that is going to be suitable for the next 10 years, or they be started specifically for the new era. So I want to give you an example. So if you look back in the last crisis, almost all the greatest technology company that we are thinking about today, were all started within a 12-month time frame. On the bottom of that V in the middle of 2008, company like Lyft, Uber, Airbnb, and the list just go on and on and on and on. It's because people could see clearly when you have a reset, what do we really need into the future? So So from that perspective, this actually is a terrific time. I've seen over 100 companies in the past 3.5 months and made a bunch of investments. And these investments I couldn't have made if it was in regular time. There's just no way. Plus, you have to see that like in the next decade, things, well, first of all, now we know, right? Now we have a second lockdown in Hong Kong. We just announced a second lockdown in California, right? So things were just opened for the last 2 days. Now all got shut down again. So now I think most of the people around the globe, especially in our world, knows we're not going back to the world that we came from. The world we're heading to is going to be drastically different, like in education, like in telemedicine, in transportation, in banking. So with all those changes, it creates huge opportunity either directly into those industries or the infrastructure is going to be needed to serve those industries. So it's really actually from that perspective, if you can think that far, it's a superb good time. Now, obviously, I'm an entrepreneur. I have a bunch of companies that are in my portfolio. So I always advise the CEO, don't expect this is going to be short. So whatever plan that you have, don't wait. You really have to have a contingency plan to know where the world is heading to and how tight cash will be. And it may be very difficult to raise cash if you're in the old business model, because you're going to have to do some changing and shifting and pivoting. So give yourself a lot of room. Survival is critical. If you don't survive, you can't make it.
Yeah. So seems like both of you are busy. Like you may be stuck at home, but obviously you guys are investing and keeping busy. So it's always easier to invest in successful company that you already know, but now you're sort of have to find companies and do diligence over Zoom or video. So have you guys made any investment? Just at least like give some hope for our founders who is on this call. If we never met you before, and I'm just pitching you over Zoom, is that possible? Are you guys investing deals with people you never met?
Yeah, Alfred, do you want to take it first, or shall I?
Sure, I'll take this one.
Yeah, yeah.
We definitely have. I have to tell you, it's not easy, right? Because think about it, we really don't have the tools for it. Zoom, as great as a tool it is, right? And think about it, this is a software that was designed purely for B2B, for enterprises. It was never designed for B2C, it was never designed as a consumer tool. They were able to scale from less than 10 million monthly active users to now over 350 million, right? It's testament to the quality of the software and how well the company was built to sustain this. But it wasn't meant for the pandemic. So we don't really have any productivity tool, let alone tools for investing, for people to meet, to do due diligence, to do all the legal paperwork, right? And to be able to collaborate, to be able to whiteboard stuff, to be able to see demos. None of those tools exist. So we're using mixture of tools. It just shows you how flexible and how resilient humans really are. And I've seen some great stuff. I mean, but I have developed this company that I like, the company that I don't like, because our screening process will only give the entrepreneur 30 minutes, right? Because we're investing in seed and A. If you can't pass through the 30 minutes, there's almost no point to go any further. So you have to be very succinct on Zoom. You have to be very professional. So you have to tell the story really well. Now, in our case, which is investing in the early stage, a lot of it is investing in the people. So the testament of the quality of the person has a lot to do with how much they get to act together. So that's crucial because now you're in this box. You have nowhere to escape. So every gesture, every little thing shows. So it's critical that people pitch their company really well in this kind of time. But it's possible.
Messi, what do you think?
Yeah, so we mainly invest in Series C and beyond companies, and occasionally we look at the Series B companies as well. So I have to say that it is challenging. So the short answer to your question is that have we actually made any investment that we've never met in person? The short answer is no. We all met the investor before the crisis. But have we conducted due diligence 100% without our people at the site? And the answer is yes. And in fact, the most of the investment we just closed in the past couple months were like that. But I think even for the due diligence point for later stage company, that's still challenging. So using the China one, we just closed this example. So although we were not there, but we did hire third-party consultant, and we hired EY to do the financial due diligence and some of the commercial due diligence as well, but they need to be on site, right? And that's not only their responsibility, that's not only because of them, but it's also because of the company, because they were not willing to share the code remotely before. So our EY consultants have to be on site in order to run the test or the authentication test within their environment. So that was, but in China that was possible. But I think going forward, we are, I do resonate quite a bit with what Alfred said. We conducted a lot of meetings over Zoom or sometimes even over the phone. I think it is possible for the investor to develop what we like and what we don't like over the phone. And we do emphasize a lot in whether we can trust the people, because once we make the investment, we need to work with the entrepreneur for multiple years, right, before we finally have exit. So we do not want we want the relationship to be friendly on the minimum terms. So we have to be able to trust the people. So it's easy to develop that, but I have to say it is challenging with the current tools to move beyond the term sheet stage and to the next stage.
Got it.
For what we do, yeah.
Wow, so the EY consultant really risked their life for you.
Well, they were in Shanghai, so they were 100% back to work by then already. Yeah, and they didn't have to, but it's our target company that they were not willing to share the code remotely to our EY consultants.
Well, I guess going to Wuhan will be a little bit scary, but Shanghai is probably okay. Okay, let's move on. Just to recap, I think it's super interesting. And as you know, like I literally have seen people driving and Zooming at the same time trying to pitch. Please don't do that. And I highly encourage everybody who's like on this call, there's a lot of etiquette like now. I highly encourage, like, this is just basically the official pitch now. So control the time, use a deck, and really sort of managing well. It's definitely sort of show the fact that how good you are actually holding a meeting over Zoom. Just to recap, like on things that you guys are bullish on, like because of COVID, so obviously like travel is not so good. And it seems like you both are really into B2B and enterprise, which is great. And it's a good sign that now like China is also more into that. But let's switch topic really quick. How about M&A and exit and IPO? What do you think about like the overall landscape on exit? Thoughts?
Well, right now, the IPO market is extraordinarily vibrant, right? So we have seen a tremendous amount of companies are going out public, and they were very well received by the marketplace itself. You know, we have Agora, which is Shanghai-based. They have done extraordinarily well. You know, since going public is 300% in stock price since, right? So 3 times the stock price since they went public in the IPO. M&A is a little slow, and I think that's it's exactly what we're talking about. It's difficult to think of buying other company when you are struggling to trying to make your company operate, right? But there's still M&A deals that get done. I mean, Uber did a deal recently, and a bunch of people, because they have to pivot out of the business they're in, or adding and enhancing the business model they are trying to strive. So a lot of that, I think, are happening. Actually, I think the exit market is fairly vibrant, but I don't think we have seen the normalized market yet, right? Right now, you look at the NASDAQ is traded at all-time high. So that couldn't be any better time. So all of this IPOs have been in the pipeline. Even through the peak of the market in 2019, they were still waiting. But now we've seen a lot of that is happening because people also are thinking about it's critical to be able to have access to capital now, just in case the market go in the other direction. It also shows how bullish the public market is really for technology company. So almost everything else is kind of meat, but technology companies are just doing super, super well. You look at their earnings, their revenue, their growth, and obviously also they're being completely rewarded by the public marketplace itself. It's amazing. And I think as things get slightly more normalized, or at least we accept the way that how things are going to work, we're going to see M&A come back really big time as well.
Yeah. Nancy, Goldman obviously is the investment banker for many, many, many amazing companies. Like, what are you seeing?
Yeah, I think I agree with Alfred. The IPO market is actually quite vibrant at the moment. In fact, there's a lot of debate that how much of a disconnect there is between the public market and the private market, right? So in our portfolio, especially the life sciences companies that are really in the spotlight at the moment. So we actually just had one company, Dine and Lead, that was listed in the A-share market. And it was, in the Shanghai market, there's actually a hard stop on the first day. It's 44%, and then 10% every day after that. And so far, every day, it's hitting that hard stop. So it's rising 44% on the first day, and then 10%, 10%, 10%, 10%. So of course, that we hope that it can continue, or at least by the time we exit, it's going to sustain the current level. But it shows you that how much of the public market is still hungry for what they perceive as the new world, like Alfred mentioned, the technology deals, as well as life science deals. So those were popular, but I think we should also caution ourselves that this is also a strange year, that where there's global tension and the multiple elections happening over the world. So a lot of people have incentive to keep the stock market at a certain level. And also we were still in the tail, or if not a beginning, of a massive quantitative easing. So there's just a lot of capital in the market. So we do see this potentially continue for a while, but whether that's really the fair price, I think there's a lot of debate in the market about it. So that's IPO. And I think on the exit side, we do find, based on our experience in our portfolio companies, and in fact, that some companies that we find were difficult to exit in the past couple years, especially in the technology side, for example, in telemedicine, now all of a sudden that people love them. And also InsurTech, right? So InsurTech and telemedicine were two areas that were theoretically right from a thematic perspective, but in reality, in the past couple of years, if you look at it globally, they were not doing that well. They weren't doing that well from a growth or fundraising perspective. But now that during COVID, their sales just, we see that in both our portfolio companies and in other companies that we didn't invest in. For example, I think one of our European portfolio company is an Italian companies focused on InsurTech. Their premium growth just grew 400% year on year during COVID. And one of our telemedicine companies also were growing 200% year on year. And there were a lot of interest in people buying secondary shares, although those companies were not listed, right? And that creates exit opportunities for us and for a lot of people. And then I think lastly on M&A, I have to say that at least from our portfolio perspective, I haven't yet seen the activities picking up. I 100% agree with what Alfred mentioned. If you look at our companies, I think the ones, they are more focused on solving their own problems at the moment. But I do think that a lot of them, especially even our portfolio companies who have a large war chest, they're actually getting ready. If they're doing well and if they have the capital, they actually do perceive this period as an interesting opportunity for them to either buy out some of the competitions or buy customers or buy products from earlier stage companies that are in trouble. So I think that has not come yet, but we do think we will see more M&As coming once the corporates have figured out their own issues. And you see a lot of announcements, right? For example, the Lululemon just just spent $500 million buying out a company called Mira, and that's because they need to repivot, right? They need to repivot from a retail type of company to more the holistic fitness, wellness solution type of company. So that's why they bought a virtual workout type of company. So this type of M&A, I think you will see more and more in the market, and with a lot of the small M&As that are more targeted on industry consolidating happening as well.
Yeah, and on this note, I think definitely crisis is. We could actually have this whole conversation in Cantonese, but I think the three of us, it's a lot of word I don't know how to say in Cantonese, but crisis as 危機 有危就有機, and there's a lot of really interesting opportunities, I think, come out because of this pandemic. On this note, sort of related, I really want to hear your thought on about, obviously there's China and US have so much tension, and it seems like, particularly with what happened with Luckin Coffee, there's more and more Chinese company getting scrutiny, particularly NASDAQ obviously haven't stopped Chinese company, going IPO, but just in general, longer term, it seems like it's not as friendly to Chinese company, which by the way, I think is really good for Hong Kong, because now the top 10 most valuable companies, at least half of them are all listed in Hong Kong now, dual listing except Pinduoduo. So if I'm more later stage and I'm thinking about this, what would be your advice for both of you, like in terms of longer term, how should I think about where to get listed? And do you think like this is going to be a continuing situation between China and US?
History will show anytime you have these kind of trade or Cold War between two large countries, it lasts a while. It's not going to just go away overnight, because you create a lot of obstacles, and those obstacles is easy to create but very difficult to remove. So my guess is going to be this is going to persist for quite some time. I think for Hong Kong it's unknown at this point, and I will say the chances is if you have a very successful technology in Hong Kong, they will have no problem listing the company in the US. I would be more cautionary if you're a Chinese company and think about listing in the US over time when you have this type of tension, right? Because there's going to be so much more scrutiny on compliances and reporting and all kinds of trade issues. And then you'll be also affected by what could happen to implement it. That's totally out of your control. Now I'm putting my own entrepreneurial hat on, running a public company. You have enough challenges in your hand about your business, your customer, your employees, right? Making a number every quarter. You don't need any more trouble, right? You're not gonna need some government sanctions that say you can't do this, you can't sell that, right? And you bar from doing this. You just don't need it. I think that would clearly affect how people will be thinking. Hong Kong clearly is in a terrific place where, actually I was in a different conversation this morning. It's actually, I was on TV and it was on the subject of the international student, whether, because the US administration was going to ask all the international students to leave. So just to let you know, there's over 1 million international students in the United States. Over 400,000 are from China alone. So because now they cannot do classes in person, they're going to send all of them home. Immediately, I get notes from like the Hong Kong University of Science and Technology and said, oh my God, we've been chasing these graduate students forever. And all of a sudden, we just got notice that they're going to come to our university instead to do research. And that's going to drastically change the quality of the research you're going to see out of Hong Kong. So I think in the same way where the listing will be the same. So if US become very difficult, Hong Kong become really a terrific place that's neutral for people to be able to list companies. I think that's going to be positive for Hong Kong.
Yeah, Nancy, what do you think?
Yeah, I agree. I do think it's a great news from a capital market perspective. I think it's great for Hong Kong. So if you talk to most of my portfolio companies, they're either most of them are based in China. I think when they think about listing, usually they were thinking about getting listed in the US, especially as a technology company. But one issue for them, it's a not new issue, it was even before the semi-Cold War that we're currently in, is that whether you are relevant when you get listed in the US market, do you have enough comps in the areas that you are playing? Do investors there understand your business so you get a fair multiple and you get enough liquidity? So those are the things that you should think about, regardless of whether we are in the Cold War or not in the Cold War, right? So I think people were thinking about those issues, and in some senses, for example, for software companies, especially SaaS companies, US seemed to be a better destination because people understand, the investor base there understands that market better. But I do think that it's starting to change now. So if you look at the capital market in the region, so China is opening up more and more the Starboard, and there are a few software companies that have recently got listed, and that they were very welcomed by the market and are trading at extremely high multiples. So I think the comp set is getting better there, and the liquidity as well. So from a founder's perspective, either you want to maximize your enterprise value, or you want to maximize the liquidity so you have the exit opportunity for yourself and for employees. I do think that's starting to become a viable destination, and Hong Kong definitely as well. So one advantage of Hong Kong is always that it's the best of both worlds. You do have access to the international capital market, and you're close to home for Chinese companies or to Hong Kong companies, of course. But one of the challenge before is that if you look at the big cap companies listed in Hong Kong, barring Tencent, most of those are in financials and in real estate. And the liquidity is highly skewed towards those names. So as a small cap company, and which are a lot of the technology companies nowadays, except for JD, Alibaba, those names, that's a real challenge, right? You have a theoretical price, but if nobody's trading, it's not that meaningful. But I do think that with a lot of the Chinese companies coming back to get listed in Hong Kong, and the peer group gets larger and larger, that aspect will improve in the next couple of years as well. And lastly, what I want to say is that do not estimate that how long the political tension might last. And I think a year ago, when we're joking internally that will we have a day that where you're not going to be able to use Apple cell phone in China, or you're not going to be able to use TikTok in the US, or WeChat, to TikTok in China, or use WeChat in the US, I think it's now looking more and more possible, and we all know it, right? So what we envisioned as not out of the question might become possible. Yeah.
Yeah, the world seems like everybody's fighting everybody. It's kind of sad. On a more positive note, then since we're talking about Hong Kong, obviously this organization is called Founders Hong Kong. Why don't we talk about Hong Kong? What do you think on sort of in general the venture landscape or the investment landscape for Hong Kong look like right now? I have to say that I think Hong Kong is not doing enough job to really PR ourselves. There's at least 8 unicorn already, and we have one portfolio company called FTX moved from California to Hong Kong. So it's absolutely possible, but I want to hear you guys' thought in terms of is Hong Kong improving? Are there more companies? And what do you guys think?
I'll try.
Should I take it? Yeah, okay.
So there's more work to be done, that's clearly. So in terms of maturity, I think in the context where from inception of an idea to incubating the idea itself, to the point that where you start to get the first customer and your little traction, to having really product market fit figured out. Those early stages, from an investment perspective, there's no doubt Hong Kong still have a lot of work to do. Because in the US, in Silicon Valley, this is a try and true model, right? So to start a company literally is 5 people at Starbucks will be able to refer you to a lawyer to get it going. And you probably get it incorporated within hours. And if you don't have a place, you can walk into one of the 7 incubators, basically on a 3 blocks radius, that you'll be able to sit yourself in a table, and then they will give you enough resources if your idea is a sound one. The insatiable amount of hackathons and ability to pitch these kind of new ideas. And so to get those off the ground, get funded, and the hand-holding process for the entrepreneurs and getting the help and the mentorship is needed for starting a business, we still have a long way to go. And a lot more effort's gonna have to be put in. And I think, but Hong Kong is a resilient place, right? So people know we're gonna have to figure out a new way going into the future, what Hong Kong is gonna be about. Technology or even life sciences, those are the easy land. Hong Kong have great education, have some great universities, right? And basically at this point, anybody can get a university education. It's not like when I was going to university, that we only have 3 of them, and then it's almost impossible unless you're really the ultimate smartest people in the world, you can get into those universities. It's not the case anymore. So getting a higher education is not an issue, and be able to start a company and having ideas. Hong Kong have access to everything from mainland into the Western world. There's no reason we can't do it. But the venture world, we still need more work to be done. And I think that's just a matter of time.
Yeah. Messi, you have invested in at least Cloak, right? Is one of the unicorn in Hong Kong.
So which one?
Did I say it correctly? Sometimes I say K-Look or Cloak. How do you say it?
Yeah. I pronounce it as a K-Look. Yes, we did invest in K-Look. Obviously, that it's in the travel industry at the moment, but it's a great business in the normal world. And we did invest in so that was probably one of the more recent examples of company that was purely founded in Hong Kong and by Hong Kong people. So what I want to highlight is that I think this land and people here are never short of entrepreneurship. In fact, that's actually people's genes, that a lot of people do want to try to start businesses and they do have great ideas. What I do think is lacking is on the support side, right? Because you do need a lot of the infrastructure and you need a culture. And sometimes you need policies. For example, one thing that in California you do have is the lack of non-compete agreement, right? A lot of people will say that at the very early stage, that was what fostered the Silicon Valley to become what it is today, because people can spread their ideas by bringing their intellectual capital to another company and then spread that over there very easily. So there's a lot of theories that we can talk about, but I think what we can see on a daily basis, one, lack of funding, I would think is less of an issue. But I think the lack of culture and the community is. So that's why I think that the Founders Hong Kong, what you guys are doing here is great, because we have to start somewhere. And then I think the second point is also a advice to the entrepreneurs is that, let's face it, Hong Kong itself is a limited market because we, especially if you're in 2C business, we only have 7 million people. And that is a small sample size, and it's and it's unlike. I think that's what's a little bit different from the U.S. In the U.S., you can have a very successful business if you're just in New York City or in California, and you can go very far if you're just focusing on one particular part of U.S. But that's not the case in this part of the region. And being in Hong Kong and being at the pivotal point, you have the advantage to both access the mainland market and access the Southeastern Asia market and or even the North Asia market, and that's what you should aim for. So what we always tell our portfolio companies is that, are you really solving a real problem and a big enough problem, right? And that's what and the portfolio companies that we do invested in Hong Kong, and a few of the unicorns that you see coming out of Hong Kong, they're all starting here, but now they're addressing a much larger market, and they're not limiting themselves to the Hong Kong market alone. And lastly, I think another challenge is also talent acquisition for entrepreneurs. That it is expensive and difficult to hire people. So I think entrepreneurs, but one good aspect is that nowadays, although in Hong Kong it might be more difficult, but still it's incredibly easy to start a company anywhere in the world. And there's a lot of tools available. And also it's incredibly easy to get a minimum viable product going. And then you can start from there and think about where's the next stage that you want to take your company. So those are some of but of course, the lack of talent and the difficulty to hire talent is a real problem once you reach a certain stage, but it's not something that are going to forbid you from really testing your product and the idea. So I think that's something that people probably should spend more time on. But again, that I think we all need to work as a community to address the real issue, because founders cannot solve them by themselves alone.
Yeah. And with that, I will do a little bit of a advertisement for the Founders Hong Kong. We have a very large mentorship network, and we actually for the startup accepted is pretty much every single night we have mentors on standby waiting for you guys to book time with them. And most of these guys are from Apple, Google, Facebook. They're just amazing Hong Kong born people. Actually, most of them speak Cantonese. Actually, all of them speak Cantonese except Vic. We put our next time speaker. But beside the point, please take advantage of it, because I found that sometimes maybe many of you are too shy, but we're here to help. We really want to help and support. So
or just make a friend. Yeah.
Yes, please. We don't stuck at home for nothing. Okay. Anyway, so now I'm going to like put my entrepreneur hat on, and I'm going to ask you, like, if I'm a founder, and then we're going to go into some of the audience questions. If I'm a founder and CEO and I want to pitch you, first off, what's the best way to approach you? What is the must-have element that you look for in a pitch? And is there anything that would turn you off in a pitch? So what should I say, what I must not say, and what's the best way to approach you? Guys.
Manzi, you should definitely start on this one first.
Okay. So we focus on later stage companies, and I'm more than happy to talk to early stage companies. Maybe not seed, but those are usually too early. But I actually spend a lot of time with Series A, Series B companies just to get to know them, because I do like to get to know good quality companies, and once they reach a stage that we're comfortable pulling the trigger, so we can make the decision very quickly. But in terms of pitching, I actually view it as a mutual. I should view it more as an interaction, not necessarily one-way pitching. But so I don't want to waste their time, and I would expect that the counterpart not to waste my time as well. So I do hope that people will come prepared, at least to have what's your product, what's your value proposition. That's incredibly important. And have you thought about the monetization strategy? Because at the investment, at the stage that we're investing, it's important. Even if you haven't started the monetization, you at least should have thought about that problem. And especially if you're a 2B company, right? Because for 2C companies, you will get a lot of iteration of your products. So I will be more relaxed on your monetization. Because you have enough room for iterations before you actually get to that stage. But for 2B companies, if you're pitching really big corporates for businesses, you only get a 1-shot or 2-shot maximum. So, and you don't have a lot of opportunity to iterate your product over and over again. So you should have thought about monetization. very early on. And that's not only how you make money, but what's your fee model and what's your sales model, and those needs to be thought through. And what will turn me off? That's an interesting question, and we do have that a lot. So we will always ask the company that why. So if we do think that they're solving a real problem and large enough problem, but why you and why now? That's always important. So from my perspective, I do like to listen to the entrepreneurs. How come that you started this company, and what's the history and what iterations that you have gone through? So the answer I do not like is why it has to be my team instead of another team that's taking the crown, is that my team is awesome. So and it's better than the others, right? So usually that you have to have some sort of either insight advantage or in hard tech area, you do have a technology moat. So that needs to be well articulated. It's case dependent. Sometimes it's really a business model or insight advantage that sets the team apart, and sometimes it's a technology moat. Actually, we do think the former case is more than the latter case, because a lot of people have technology moat, and those go away if you don't have a successful business model very quickly. But my team is awesome, and I'm better than the other team. That's not a good enough answer, but we do have that a lot. Yeah.
So for us, actually, it's very easy to reach me. So write me an email at alfred@raise.capital. I never not reply to an email. So even when I'm not interested in what you're doing, I'm still going to reply back to you and let you know exactly that is going to be the case. But actually, many of the way that we look at a company is not that different between how we look at in seed and A to what Nancy's looking at to C and onward. So I've been through every stage myself. I used to run a company with 6,000 people, and publicly listed for 14 years. And that aside, I think there are some elements, especially when you are pitching to a C to A type company, a lot is about the people, right? So if you have the right leader, it shows a lot. This will be the right leader to, first of all, figure out what you don't know. If you know what you don't know, you have a shot. If you don't know what you don't know, then you're in trouble, right? So we look for the people that are intelligent and open-minded. I tell entrepreneurs all the time, we run our fund like a software company. We meet every day at 4 o'clock on a scrum call, right? And we only invest into companies that we want to co-found with. So that emotional trigger is critical, right? So if you really are passionate about what you do, you have sufficient knowledge, your mind is flexible enough to take input, then I think we're off to a good start. The rest obviously would be the fundamental of the idea. So whether there is going to be a product market fit. And that's kind of a good investor in the early stage is supposed to come in and provide guidance and say, you know what, no one's going to buy this, right? Even in a pivoted world. It's just, I can't see it. And maybe I'm wrong, but at least this will be one input. Then you should have a good answer to come back. So as I said earlier in this call, that because we screen companies only at a 30 minutes block, which early stage companies, sometimes people even have shorter screening time. So it's crucial that you get your act together. So you really should have your material together. You should walk it through very carefully. If you have a demo, do it, right? So you can illustrate as much as humanly possible what you're up to is so crucial, and have it down and make that emotional connection so that you can get to the second meeting. That second meeting, you can go deeper, and then both sides will be more relaxed. So those are crucial things to do, right? So, but by the way, don't cop an attitude to think that you're the only one that can make this happen in the world. And sometimes even in the best idea, we see many of them, they just never turn into reality because the person's not flexible enough. I have never seen a single business, including the ones that I ran, that you don't go through multiple pivot, whether it's on go-to-market or in technology. It's the nature of the beast. Even the size of a Google, of a Facebook, you ask them, they're constantly pivoting themselves also because the world's changing, right? You have to reattune yourself to the world that is coming at you. There's so many factors. So you have to have a very open mind and be flexible. And you have to be determined that anything that you do, especially now post-crisis, you have to be in it for a long haul. And that's, by the way, we go back to the subject talk about Hong Kong. One of the things that we have to change in the mindset, which I can't blame the entrepreneurs in Hong Kong, because when you see property prices rising in an astonishing rate, and you said to them, you said, well, you're going to be in a 10 years gig. You're going to be not making very much. So it's scary for them, right? How they ever going to be able to afford a property? How they be able to get married? How will they be able to develop the next stage of their life? It's hard, but entrepreneurship is not easy, right? So it's great to look at the success, but it's never easy to do. It's a commitment you have to make, and that commitment, you can feel it on these calls. Even in a Zoom call, even within this box, I can feel that commitment. And that's a very crucial thing to start. And I don't think that makes any difference when you're a series A, B, C, D, even in mezzanine or when you go public. I still have public company CEOs that I have invested and mentored at a very early stage, still come see me on a regular basis, right? And I still feel them, they act the same. They never act, cocky. They never acted like I'm satisfied. Anything that has to do with technology and sciences, expect one thing. It's going to be constant change. It's never going to stay in one place. If you are, your competition is going to be right up your behind and going to pass you.
On that note, I can tell you what turned me off. We had one of the pitch call. The entrepreneur really could not stop coughing, and then and then our team just started chatting in the back and say, I think this person probably had COVID. I could not stop laughing for a long time. So please stay healthy. And if you're sick, it definitely will turn off your investors. Just be careful. All right, I'm going to take one question from the audience, and then then we're going to play a quick game, and then that will be the end of our conversation. So this question is from Vincent. And by the way, the gold and the Bitcoin thing we'll address in our game. So don't worry, we will address it. So after COVID, would there be any extra metrics that you will look at when you're evaluating companies, any cash flow, profitability? Does it really change because of COVID or not in terms of the metrics that you look at? I guess B2B and B2C will be different as well.
Yeah, maybe I'll take the question first. I think the short answer is, in general, yes. And we do care more. We were more lenient on cash flow generating capabilities, but that actually started to change in the past couple years already, right? When we sense that the music's going to stop at some point. But I think the COVID, it just accelerated that process. We do care a lot more about the company's cash flow, and it does not necessarily need to be cash flow positive, but we would actually examine, is it something that they can control, right? For example, if the company is spending a lot of time on, spending a lot of capital on pure client acquisition, without a clear idea of how that cash burning is going to turn into future revenue, then we will probably hesitate. But if that capital is spent on R&D that are going to clearly drive the next stage of growth, and it's something that they can just cut if they run into trouble, if they don't have capital in their war chest, that's something within their control, then we're a lot more comfortable. So the short answer is yes, we do care more about the cash flow.
I used to have a saying. So my own mentor have always told me about one thing: cash flow is shareholders' happiness, right? So why create a business if it's not going to turn cash? Why do it? Cash used to be king in a post-crisis timeframe. is King Kong. So because it's hard to come by, and you have to expect that's really hard to come by. I'll tell you a live example. I actually saw an entrepreneur today, which I think, sadly, I was very turned off. I was very turned off because the entrepreneur started, like literally in the months coming into February, a Silicon Valley is easy. You can go raise $2 million, sometimes even more, right, on a very healthy valuation, but you haven't written a line of code. You just have a rough idea. You haven't even sketched out perfectly on a PowerPoint. And they were able to go raise money because there's just so much money floating around. But they're still lingering. Some of them, they were able to raise a good sum of money. The entrepreneur I saw today did exactly that. And then it say, well, my strategy is bottoms up. I'm just going to go recruit a bunch of developers. So how about your go-to-market? I suggested a few things. So, well, we don't even want to think of that. We have no interest in generating any money at all. And then we'll actually, it's better that we don't generate any money, and we go straight to raise a big Series A, raise $20-30 million on a big round. I was thinking, what planet are you on, right? That is unfortunate, I think, because they didn't have enough experience. They were flooded with so much capital, and now they don't even see what's coming at them, and they bear a huge cost structure, right? Which is incinerating cash. So those are very crucial things. Now, as the stages get further in, obviously that's get more critical just because your burn rate got much higher. So when you become a Series C or Series D company, you have big costs. And next thing you know, you look around, you're short of cash. And then when you're in the super painful mode, those cash you raise not only hurt the entrepreneurs themselves and the equity structure, but then you ended up hurting all the investors that were supporting you all the way through. So those are things that are very, very crucial, right? So the people that supported you, those are the people you ultimately want to be. I mean, when you find a good investor, they should be investing you for life. If you do one company is successful, they by default should be your second one. So that's very important to think about. So I couldn't agree with more that this cash thing, which unfortunately when you have flooded capital in the market, people stop thinking about it that much. This is something that's always is the most important hygiene in any company. It's extremely critical, yeah.
Okay, so with that, we only have 2 minutes left and timing is perfect. And you guys don't have to say anything. We're gonna end this call, this conversation with a quick game. All I'm gonna say is a word, and you don't even need to say you're bearish or bullish. I'm just want you guys to do thumbs up or thumbs down, okay? And I will do that with you guys too, because I think it's fun. All right, e-commerce. Okay, how about fintech? Okay, education.
Depends. I said something, sorry, I broke the rule, yeah.
I think if you're doing offline would be very tough, but anyway, yeah. Healthcare. Okay, enterprise. Okay, I guess everything is great. All right, open source and developers tools. Okay, I was gonna, Nancy, I'll ask you next time, why the delay? Sharing economy, any like Airbnb for X, what do you think?
Depends. This is a hard one. This is a hard one. Yeah.
This is a hard one, yeah.
This is a hard one.
How about video first economy? We've been seeing a lot of like Zoom for this, Zoom for that. What do you think?
It's a hard one as well, yeah.
Okay, three more. Uber for X, like Uber this, Uber that.
This is a hard one for me, yeah.
Yeah, so this would be a great thing like maybe 4 or 5 years ago, but all right, we have audience questions. How about gold? Okay, and then last but not least, crypto and blockchain. I'm so bullish. All right, so with that, that is our final questions. Thank you so much. We're set, this is 10 a.m. Hong Kong time, right on time. Thank you so much, guys. Alfred, Nancy, for taking the time, and super fun conversation.
Yep.
We'll do it again.
Thank you.
Yep.
All right, bye guys.
Bye-bye.
Bye. Thank you. Bye.